most of you at this point, right? What would you do? Give me some answers. Replay. Let me just make sure I've covered the important parts. Yes, I did. Right. Check it out. Where's the replay? On the laptop. I'm used to the phone because that's where all the trading and analysis happens. Where's the replay button? Damn. Is this different?
You got to move the toolbar that up of your screen.
Where?
The risk reward. Yeah.
Right. My bad. So, what were you doing up here? What do you see? Let's go and pull out the good old replay button, right? The good old hindsight replay button. What would you be doing?
I would see a lot of consolidation. I want to see the high being taken on what is that? The 12th of September, or what is that?
What about that?
Right there. I want to see that being taken out of. But
why are you ignoring this? Why are you ignoring this shift in market structure?
I didn't know that.
You know now, and FVG as well.
But what would personally, what would you consider that?
I'll tell you exactly what I consider it, and I considered it right.
But wait,
for now,
where's the asshole that messaged me?
What are you saying?
Wait, sorry. My bad. Come in to mute that.
Focus. So we were saying, what do you see over here? Answers.
2022 mentorship entry model, market structure shift, and fair value gap.
Beautiful.
And an IO FED.
All right. FED? What's that?
IO FED. Institutional entry.
Institutional. Okay. Fancy terms, right? And what else? What else do you see?
Equal lows.
Very good.
That's fair value gap right there. That's a fair value gap on what is it? Hourly? Fair value gap on hourly and breaker. Old breaker.
Nice.
But the move is into a bearish fair value gap, right, on the left side.
Okay, but it shifted structure. So do you choose this one or this one? Which one do you choose?
It looks like it's the fair value gap is the high time frame.
Which one do you one by one? Which one do you choose and why?
I think the one.
If I'm being honest, I would choose the most recent price action, which is the market structure shift and the BISI, the bullish fair value gap below, which is not going to be the correct answer.
What we're dealing with the daily time frame right now, that you see that big ass candle, the red one. I'd rather choose that as a.
Okay, so you would rather personally with no system. So this, I would rather choose it because it looks nice. That's what you're saying. Give me a logic.
Liquidity.
I actually choose the
one by one. If you hear someone speaking, please remain quiet.
Actually, I'll choose the inversion there because it actually has an inversion and the BPR inside. So, and I'll use the size of the candles, and I'll actually go for bearish.
Okay. You see, in hindsight, it's easy, right? Because you know the answers. But to really learn, be honest with yourselves, right?
I'm trying to tell you, like in hindsight,
yeah. See, this is a prime example of back testing, right? Back testing. When I back test, at least, I don't know about you guys, but when I back test, and I don't see myself superior to any of you, by the way. Just it's a simple sit down and talk with all of you, right?
It's not, yeah.
Showing you something which you may not know, right? About turtle soup, especially, right? So when I see this, I'm trying to live the moment. What would I think at the time? Bullish or bearish, and why? Right?
I see a breaker too.
I would say it's bullish because
Here's a breaker. Here's a breaker. Look at this.
Yeah, I see a
There's a breaker.
breaker.
Bullish. Buy side liquidity, right? Fancy term thrown around
Yeah.
loosely.
before that, dude.
Exactly. Buy side liquidity. To the moon, right? And you, Zlatan,
Well,
why did you say
yeah,
why did you say bearish? Why did you say bearish?
I say bullish.
I said bearish because
No,
of
no, no, no. Zlatan
the
FX.
inversion on the BPR at the left.
He said bearish. Why? With a solid reason, not some random.
You're talking the fair value gap there was bearish and it was invalidated. Then price later used it more like a resistance, more like a support onto resistance. So
All
it's
right.
an inversion. I'm gonna use that.
So you're gonna ignore the breaker, and why? It's a breaker by definition. It's a breaker. Why are you ignoring the breaker?
Actually, when I see equal lows, I try my best to see a reason why they set out those equal lows. I don't like taking setups that are below or above liquidity.
Good, good.
Why do you consider that as a breaker, per se?
Why do you not? I
It's a
mean,
pattern.
Like,
if you look at the
Because-
pattern for the pattern's sake, low, high, lower, higher, high breaker.
well, it's a broken breaker, right? It's not like
What do you mean broken
we
breaker?
broke that breaker because
What
it's
does that
not
mean?
for the low, but for the high.
Low, high, lower, higher, high. As solely a pattern, it's a breaker. Yes or no? Do you disagree?
Yes.
For
What's
high
yeah.
time frame.
What's the breaker? What's
What's
the
the
pattern? What's the pattern breaker? What does it say? Low, high, lower, higher, high, and that's a breaker, right? As soon as you close the body above the breaker, then you can use the breaker's body as the pivot point to enter from, right? Depending on the shape, of course. If the breaker has a wick, you choose the wick. But if it's a long wick, you choose the wick to the body. You prefer it to be a large candle, right?
That was a
Large
negative breaker until it was broken, right?
What do you mean?
That was a negative breaker until it was turned to
Here's
positive.
breaker. This one.
That one. The above it,
But it-
where the box is.
There's
That
no
one,
negative
yeah,
breaker,
yeah.
my friend. This is not a breaker. This is a bullish breaker, as a pattern, with no logic, with no.
Well,
Um,
it turned logical for the positive because it was broken. No,
Which means,
Am I wrong?
are you bullish or bearish? Are you bullish or bearish?
right now what the signature says, I'm bullish now.
Exactly. That's the point. So how is it a breaker? Because of this, right? 1, 2, 3, 4. Breaker. Zlatan brought up a good point. Is when you see equal lows or equal highs, right? The only time I will accept a bottom or a top to form with equal lows and equal highs is if there's an SMT, right? That's the only time.
Can I ask you something?
Generally speaking, equal lows and equal highs are usually price doesn't go too far away from them, right, before reversing. Not solely as equal lows, equal highs, as a pattern. Again, that's another pattern, equal lows, equal highs, right? There's a lot more reasons, and the correct answer is show me the higher time frame, right?
Yeah.
So you can't just say breaker. You have to show me the higher time frame. Now, another example. Let's go more into the logic. Of course, we know what happened over here, which is we went above a high. Those of you who were into crypto back then, you remember that everyone was super bullish up here, right? Everybody and their mama was super bullish up here, above this high. Remember, rule number 1 of smart money, quote unquote. Rule number 1 is buy low, sell high. right? Buy low, sell high. Or don't buy high and don't sell low. That is the rule number one of turtle soups, right? This is the whole logic behind them: is buy low, sell high, don't buy high, and don't sell low, right? Applying this now, that can be ambiguous, right? That can be, everyone knows that. All the retail quote unquote traders know that. So how do you measure high and low? Some of you already know this, right? Some of you who are in here already know what I'm going to say. How do you measure high and low? You measure it using, let's use a recent example, spikes things up, right? Let's use ES.
I live high and low.
What are you saying?
What? No, I'm listening.
All right. ES, highs and lows, right? So how do you measure high and low? And if you remember, on the good old Twitter, right over here. Good old replay, but this one is called live, so I've earned the right to dissect it in hindsight. So right here, what do you see? What do you see over here?
Market structure shift.
Market structure shift down.
Very nice. Beautiful. Excellent. So bearish, right?
Yep.
Correct.
All right. What happens next? Before that, I want to focus on this part where this day closed like this. Now what do you see? Shift, right? Market structure shift to bearish with an FVG. Everyone and their father and mother and sister and brother and cousins and everyone and their dog, if they had a dog or cat, whatever, or tiger, everyone was trying to sell this FVG. Probably some of you as well. Yes or no? Be honest. Don't lie to me. Was this on your radar for a sell?
Yes, I would.
I mean, you guys, I'm assuming you trade ES, right?
Yeah.
Exactly. So what were you thinking? This is a recent active trade. It's not some 1 year. So what were you thinking over here?
On the Thursday, before that large bullish candle printed, the daily time frame did make me flip my bias to bearish.
So you flip bearish down here, right?
Correct. Yep.
All right. And then what happened? Did you
wrong.
execute? Did you that's normal, but did you execute based on your bias?
I did not execute. No,
Why?
because of the weekly time frame. If I'm being honest.
All right. Very good. That is an excellent answer. Now, others answers. What do you see over here? What is this? What do you see? WDYS.
That is a market structure. I want to expect that fair value get to be filled. I would
All
say
right, let's use you as an example. What's your name? 1 second.
Z1 trader.
Z1 trader. Let's use you as the example for this example, right?
Please.
Let me show you.
Yeah.
Let me show you the power of the higher time frame and what it can do to you. So, what happened over here is you're saying it's a bearish market structure shift, right?
Well, I wanted to go back
What
into that.
What is
that
rule number one?
gray zone.
What is rule number one? Before anything, what is rule number one?
Approach the market with no
Rule number one.
approach
is
the market
buy.
with no consideration.
The fuck is that? One
But
second.
you doing something right.
Don't buy or sell highs. Lows.
Nah, no. The hell is that? No, of course not. No. It's buy low. Right? So rule number one.
Sell high.
Buy low. Sell high. or don't
Oh,
buy
buy high,
high,
sell low.
don't buy high, and don't sell low.
Buy high,
Right.
sell low.
That's before anything. It's basic
Yes, sir.
economics, right? Now, where do you find the most expensive places to sell? You want to sell high, right? You want to sell for expensive, not for cheap. The best place you can sell is above a high.
Yes, sir.
The best place you can buy is below a low. Now, these are basic concepts not to be used by themselves. Otherwise, you're going to get wrecked. That's why we have market profiles. That's why we have PD rates. That's why we have opening time, right? That's why we have profiles. No, market profiles, templates, rather, right? But the basic premise is when you learn a new concept, then you learn the basic bare bones concept, and then you build on it later on, right? So rule number one is buy low, sell high, don't buy high, don't buy. Now, how do you measure high and low?
I would assume with the premium discount Fibonacci, you know what I mean? We're just using the fib for that reason.
I measure
of
high and
premium.
low using I measure high and low using 3 different. Why the fuck is this doing this? What is this? All right, never mind. So, number one, using the IPDA data ranges. I think this is a magnet or something. One second. Let me go check. All right. So number one is the IPDA data ranges. They help you measure high and low, right? How does that work? Anyone knows? Nope. All right. IPDA data ranges. Number two is the dealing range. I'll answer. I don't answer right now. Next is the dealing range, which you measure the Fibonacci from. And finally, you have the. Let's write this down with the. Let's write this down with the. Here. So how do you measure high and low?
Hey, Romeo, somebody's
as shown by ICT.
Somebody is zero on Trader. Zero on Trader. If you do that again, you're gonna have to be.
Anyone can you mute?
somebody's like mocking you right now.
Teaching what he taught.
I'm gonna have to mute you.
Apparently, I have that shit on.
Because the
There you go. That's better. So there's someone I want to add to speak because he's an astute learner. Let me see if I can find him. If I can't find him later on. Please be found. Nah, I can't find him right now. I'll find him later on. So how do you measure high and low? By using the IPDA data ranges. That's number one, right? Number two, by seeing the dealing range of the low which you measure the fib from, right? And finally, the current expansion leg, right? These are the 3 criteria for measuring: are we high, are we low, right? So note this down. This is important. Let's look at the data ranges. So you said just now, based on only a pattern, you said market structure shift, right?
Correct.
Now measure the data ranges. Apply all 3 of these. Get out of here. Apply all 3 of these data ranges. Count back 20 days. 1, 2, 3. That's 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, right? 16, 17, 18, 19, 20. 1 second. 26. 20 is over here, right over here. 20-day low. Now, what happens at a 20-day low, my friends? What is the classic pattern that happens, which is expected to be happening at 20-day lows?
Total soup.
Exactly, as seen in Street Smarts, right?
Yeah.
So first of all, we are now below measuring the if the data ranges 20, 40, 60, right? We are now in the according to the 20 IPTA data range, we're now below the 20-day low. That alone is enough for me to be bullish or not bearish. You notice? So it's not being bullish only. If you're not sure, you can simply not be bearish. Right? So buy low, sell high. Don't buy high, don't sell low. Right? So by measuring this, you're simply not being bearish. So if it doesn't make you money, it saves you money. Right? This measuring high and low, quantifying high and low. And if you remember, right over here, I had mentioned a tweet. If you remember, those of you who followed, some of you made some money with that, so good for you. But right there, I had called the low of the week on ES, right over here, and we'll see right now in the market profiles as well. Okay? Why did this happen up here? Why did price not keep going lower? It's a shift, right?
Hedge fund managers are like people are taught to sell when the 20-day low is broken on a breakout.
Let's check something else. Let's check number 2, the dealing range, the fib, the range which you pull the fib from, right? So I'm going to take a Fibonacci 2. Go to the swing low that broke the high, right? Right here, swing low, which is a low, higher high, two higher candles above it. The way ICT teaches it, nothing new over there. You measure the fib, and what does the fib say? Are we high or we low?
We are low.
Very good. What does the current expansion leg say? Visually, right? Visually. Of course, you quantify this visual expansion leg with the data range. But the current expansion leg, which is the swing high we're coming from, because every price leg starts with a swing high or swing low, correct? Every single price leg has a swing high and a swing low to kickstart the price leg, right? We have the swing high over here, right? 1, 2, 3, swing high. Are we low or are we high? Visually.
Low.
Low. So are you bullish or bearish?
Bullish, because it's below the equilibrium.
Instead of using your market structure shift, now remove this and remove this, right? So we're below a 20-day low, right? So the data ranges are saying that we are low, and the dealing range is saying we're low, and the expansion leg, the 3 criteria to measure high and low are saying we're low. So are you bullish or bearish?
Should be bullish.
It should be. And was it? Yes, it was. And this is where the low of the week was called, right over here, almost to the tick, right? As opposed to simply, now look at the difference between that scientific approach, right? As opposed to simply shift in market structure, right? You simply go, shift in structure, sell. That's pattern trading, right? That doesn't work. Maybe sometimes to sucker you in, but it doesn't work. So measuring these three reference points, right? To measure, are we high, are we low, right? We'll see 2 more examples, maybe a bit more, with this same exact.
Sorry, just before you go further, can you tell us from where did you calculate the IPTA data range?
From the current day.
Current day, but your tool only showed 14 bars, right?
Yes. I think it's just regarding the weekends. Second. Data range right here. 20-day. Don't look at the bars. Look at the days.
Okay.
Right.
Okay. Yeah.
Because
Sorry.
turtle soup. What is turtle soup? The 20-day higher low, right? Because turtle traders, which is a strategy as well, which it works, It's simply low accuracy and high risk to reward. They're basically gambling, right? Pretty much. So turtle soup is suckering those people in large money. Money can be large amounts of money, right? Being suckered in at the 20-day high and 20-day low.
Okay.
And was it being at the weekly fair value gap low?
Thank you for bringing that up, because combine these three, like you can use these three alone to trade one time frame, right? But now look at the same exact price leg, which you all said, every single one of you said it's a shift in structure, right? Now look at the same exact leg on the weekly. What do you say now? Are you bullish or bearish?
Bullish.
Bullish. Is there any chance you can be bearish over here?
No.
Let's try. No. There you go. Beautiful. Excellent. Right over here. So at this point in time, now we don't need to look back that far. We simply look back for short-term trades. We look back to the previous 20, 40, 60, right? So in the weekly, I think it's going to be 8 candles. 1, 2, 3, 4, 5, 6, 7, 8, right? That's 60 days, correct? So you ignore everything else behind this. It's noise to you, especially for short-term trades. In fact, the 20-day range will give you the 20-day data range will give you a good setup. It's enough. That in itself is a model by itself, right? So most of the things I'm saying over here can be a model by themselves. It's simply about choosing one and making yours. So, are you bullish or bearish here? It is now. It was. Let me just double check. The month of May, I am completely not dialed in the markets, but I was over here. It was April. So, it is Wednesday, right? So time. What is time? Time of day, day of week, right? Day of month, week of month, and so on. Time of day within time of day for scalpers, and so on. So we're hitting a weekly FVG on a Wednesday. What's going to happen? We're hitting the weekly FVG on a Wednesday while we're low, while we're beneath the 20-day low. What can happen?
Low of the week.
Thursday and Friday is going to be reversal.
Yes. No, but focus on the concept. I'm not here to parrot and repeat the already available ICT weekly profiles, right? The point is the same exact fractal and price on the 1 day. What does it look like? A shift, right? Correct?
Yes.
With an FVG. And this same exact price fractal, when you're looking at the higher time frame, you're seeing bullish. You're all bullish now, right? So if you're bullish now, then why did you say bearish when I first asked you? That's the question. Because you were focusing on one time frame only, which is incorrect. You can do it if you want to look at the charts with one eye. But when you look at only one time frame, you're blinding yourself, right? And the rule, of course, which I made up myself, which I haven't really seen anyone say, so I'm simply gonna attribute it to myself, which is a lower time frame market structure shift is less relevant than a higher time frame PD array. Go back to that one. Enjoy. So a lower time frame market structure shift is less relevant than a higher time frame PD array. Right? Let's write that one down. Lower time frame market structure shift is less relevant these fucking Spanish keyboards. Less relevant than a higher time frame PD array. Now, this statement in itself is forcing you to look at 2 time frames. I know a lot of you are lazy, which is normal, or too lazy to consider the higher time frame. Like, you know, it's fuck it, let me just trade this shift. But no, you're blind. A lower time frame shift is irrelevant in front of a higher time frame PD array. All right. So every time you see a shift in market structure, how do you apply this? It's talk is cool. I can talk all day long. I can talk for hours. I've been talking for 5 hours almost right now, right? 3 hours, of course, as a bonus live stream for the early joiners, which I believe was recorded as well. So you look at that. But the point being that if you see any market structure shift, then you go and inspect the higher time frame, right? So, any questions about this?
For short-term trades, do you look at the monthly? Sorry.
What are you saying?
For short-term trades, you also look at the monthly, right?
For short-term trades, the 20-day range is enough. The 3-day and the 20-day range is enough to give you a nice short-term trade.
So then you wouldn't look at the monthly PD array?
I always look at the monthly every single time. Look at that. There you go. The reason I tweeted this, I'm sure some of you must have attended this tweet live, right? The reason I tweeted this was the logic I gave you right now is, number one, measure, are we high or low, right? We're literally below a low. And the rule number one says never buy high, never sell low, and buy low and sell high, right? So right over here, the logic was simply that, right? 20-day low into weekly FVG, and the 3 measurement points we have are telling us that we are bullish, not bearish. All right? And based on that, a simple tweet. It looks simple, it looks easy, but there's not a lot of thought. It becomes second nature almost eventually. But this is the thought process that went behind this tweet, right? Always same exact thing. So
but then would you expect it to dig deeper into the fair value gap the second time like we saw?
Again, this goes back to if you remember, I have a tweet that says there's 3 types of reactions to a key level, right? So when you have a key level, let's use the FPG for example, when you have a key level, right? The reactions from this key level can be 3 things. Whether it's a PD array, whether it's a support level, whatever it is. When you have a key level, the reaction can be one of 3 things. A V-shaped instant reaction, right? Or it's going to be a W/M shape, right? It's going to be a 2-touch, whether it's a turtle soup or failure swing, right? Or turtle soup, even. You see turtle soup right there. Or it can be multiple reactions to the same. Let me remove this shit. Remove. Or it can be the same. It can be multiple touches to the same level. Now, this one, of course, is the least favorable, right? This one is the least favorable of the 3. You don't want to see this. You want to see either an instant reaction, or you want to see the most common one, which is this. So the most common reaction we get is this. So it's not unhealthy to anticipate a second touch of a key level. Now, I wasn't anticipating this one to happen, right? However, the fact that we took out the previous week's high on Monday, right, and gave this order block, that is a reason to target at least this low. So I called for a low of the week over here. It gave us a bounce, right? So that's regarding being wrong and making money, right? So you can be wrong and you can still make some money. And it tanked, right? So when you see a rally early in the week, then it's always suspect. Nothing new. Power of 3. Right? So that is the logic behind a turtle soup setup. You see this? This is a turtle soup. What happened down here? You tell me. Dumb money got wrecked because we're talking about smart versus dumb money. Every single retail book classifies this as a sell, right? At least this or a retrace, one of the two. So every single, put it this way, the majority of people were shorting here at this previous support or down here, right? Except those who know, which is buy low, right? Sell high, or don't buy high and don't sell low. Right? If that rule doesn't make you money, it'll save you money. How do you measure high and low? You measure high and low using 1, 2, and 3. As we saw, 1, 2, and 3. Right? So that is exhibition number 1, right? That is example number 1. Now, the same exact thing, because price is price and price is fractal. Remove. You guys want to break, by the way, or you guys good?
Good, man.
Yeah,
Good.
question
yeah,
on. I got a question on Khan Barakat. He was
What did he say?
asking. I'm speaking in behalf of Khan Barakat. He was asking, can you explain why you used that for dealing range about 5 minutes ago when you talking about dealing range?
Okay, you mean the range I measured the fib from, right?
I think so. Yeah, it was about 5-6 minutes ago.
All right. Oh, and you mean why did I choose this low? That's his question.
Probably.
All right.
When you
I mentioned it at the beginning of the fib pull, so you should be focusing, my friend, not you, the other guy, right? So it's the swing low. Just again, it's. I feel like this kind of stuff, especially the Fibonacci pulls, they come from your own experience and tape reading, right? So the swing low, that the most energetic swing low that broke the high, that broke the low, right? So that is my fib pull, personally, right? You can even choose this one if you so choose. You can go a bit lower to this one, but the one I would use is this one right here. The same way good old ICT teaches it. So, do you guys want to break right now, or do you want to continue? You tell me.
To continue, mate.
2-minute break.
Yep.
See, you guys are watching, huh? I'm the one speaking. So, all right, you can have a break. You have 2 choices: a break and then or example 2 and then break.
An example 2 and then break.
I had a quick question, if you don't mind.
Tell me.
Yeah, so regarding the IPDA data ranges, I don't have much idea about them. So the 20, 40, and 60, you used
if you don't have an
20
idea
days.
about them, if you don't have an idea about them, then go watch month 5 core content, right? I'm not going to go and teach
All
you.
right, I'll do that. All right.
All right. I'll teach how not his stuff. Keep that in mind before asking a question.
One quick question.
Tell me.
So then, could you have traded non-farm hero using this logic?
Do you mean
Since
the rally?
Thursday.
You mean the rally we had? If you were following my Twitter, then I called the low, right? Of the order block, of course, because I wasn't at the charts at the exact low. But as soon as they gave me the order block, then I called for a rally, right? Same logic. Nothing else. Previous week's low on a Thursday, right? When a higher time frame PD array, a key level is matching with Thursday, then and they give you a reaction, right? If you want some confirmation, you are entitled to it. Then price simply has no option but to reverse, right? Digging into the weekly key level for the second time. Remember the concept of touching a key level more than once. Now here's an execution tip, right? Is when you the reason people have break even. So I'm sure it's happened to you where you have a trade you enter, right? You put the stop at break even. It comes stops you at a break even, and then it rallies, right? That's happened for sure. To all of you, to every single one of you, I can guarantee it. The way you can prevent this is by healthily anticipating a second touch of a key level, right? That's how you implement that concept into your trading. You have the bare bones concept, make it yours. Feel free to go and try it out, and it's yours, right? So, there's 5 hours of speaking, but I can go for days. So, example number 2 now. How's that sound? Good? Example number 2. Sounds good?
Sounds good, mate.
Excellent. So we've been going. When do we start, by the way? 10.
About that, mate. Yeah.
10, 11, 12, 10. Dang. All right, almost done. So now, again, what do you see over here? Answers are welcome.
Market structure shift. A few market structure shifts bearishly.
All right, so you're expecting to sell down here, a FOMO sell, right? Or you sell
I see an old 60-day low taken.
In hindsight, it's 20 out of 20, but I'm saying, what would you see at the time?
Probably we're on the midway of the sell side of the curve of a market maker sell model.
Who are you? Let me see. Who is this?
Hopium.
Who's speaking? Hopium.
Right? Yeah.
All right, Hopium. That's a nice name. You into crypto or what?
I used to follow crypto, and then I like the concept of it.
I can tell. So, what happened here, Hopium?
So what I said was I would have seen this as the sell side of the curve has already started because we added SMT at the top at the end of February, and then we're probably on the sell side, so we're continuing down to take the original consolidation at the bottom.
All right, so a nice pattern.
And we had displacement below the low, so it's even more confirmation that we're going lower.
So be honest with yourselves, right? Now focus a bit over here. This is an important one. Be honest with yourselves, and what would you do over here at this point in time?
I probably try to short at the breaker, which is kind of at the high of that SIBI, on the daily SIBI. I'd wait for a retracement to short, basically. Yeah.
All right. Very good. And any other answers? More
No,
answers?
if I'm being honest, sorry.
If you're being honest?
If I'm being honest, yeah, I would be bearish as hell and want to look for shorts.
Exactly. Bearish as hell, right? Equal lows,
Yep,
man. Look
correct.
at this.
Yep.
Low. God damn. So, and what else? More answers? Any different answer? Because I know that most of you were bearish on Twitter. I saw all of you, right? Not you, but people in general. Every single person was bearish down here. Down here. Right? Now, luckily, I have the remedy to that. To the sickness, which is the market structure shift. Right? What's rule number 1?
Rule number 1: buy low, sell high.
All right. Before we start, I want to invite somebody to talk who is DMing me. I hope I can find you. I can't. My friend Pip Smoke. All right, there's a few notable people over here who are astute learners and deserve to be praised. There he is. Allowed to speak. There are some others as well, but I can't see them right now. I cannot see them. So,
what's up?
What's up, buddy? How's it going?
You doing all right, you?
I'm doing good. I'm doing excellent. Here's someone else who wants to speak. Allowed to speak. Oh, this shit. So, being honest, I'm assuming you're all real traders, right? Who trade live accounts, who risk money day in, day out. Most of you, at least. So, what would your actions be down here?
You can hear me.
Hopium said selling. The other guy said selling. Bear says hell and selling. What else?
If I'm being honest, I wouldn't be bearish. I would start off with the weekly time frame and see what the bigger picture is.
I mean, it's a recommendation to be honest with the answer. Why? Because if you don't, you won't learn, right? If you don't be honest.
I'm honest. I wouldn't.
What are you saying?
I wouldn't be bearish. Just for the fact that I
trust you. That you're honest. You're the only one I can trust over here. Well, almost. And a few others, right? About the answer. Because I've seen the stuff you send me on the DMs. But as a pattern trader, 99% of Twitter was bearish over here, right? How did I calculate the stat? I don't know. I just made it up, right? But everyone on Twitter was bearish down here. Why? Because of a market structure shift. The same exact logic that we saw in ES, right? Flawed logic, if I may. Now, rule number 1 is buy low, sell high, and don't buy high and don't sell low. Correct? Based on that, how do we measure high and low, my friends? How do we measure high and low? How do we measure high and low?
20, 40, 50.
Again, looking for the IPDA data range.
Yep. Number 1 is the IPDA data ranges. Number 2 is the dealing range, correct? Number 3 is the current expansion leg, right? A visual representation of the expansion we have experienced from the swing high or the swing low. All right. So measure them. Instead of now think about what I'm doing right now. You're changing your mind completely based on the information you have. So you were selling down here. Now, based on this measurement, which is rule number 1, always, right? IBDA, what does IBDA say? IBDA. Let's go to the data range. So you go 1, count from 20-day, low or high? Low, right? Nice silence. 40-day, low or high?
Low.
20, 40. 60-day. Let's go to 60-day. So, as I said, for a short-term trade, the 20-day data range has enough liquidity within that range for a good trade, right? Short term. The deeper you go, the longer the range. The deeper backwards, deeper meaning the more back you go, the more forward you can cast. So we look back to cast forward. Data ranges, 20, 40, and 60. Right? And the 60. Let's measure all of them. 20 low, 40 low, 60. Is it high or low? What do you say?
It's in a discount of the 60 range.
Very good. Very good. Excellent. So we're low by all standards. Yes or no?
Correct. Yes.
Yeah. And why? And what does rule number 1 say? Buy low, sell high, or don't. If you're not sure, don't buy, because when you're going to apply this yourself, then you may be confused at the beginning, right? When you apply this, you'll be confused. So that's why there's a second part of the rule, which is don't buy high and don't sell low. Never buy above a high and never sell below a low, right?
Excuse me, Romeo. I'm not sure if you expanded on what number 3 actually means compared to number 2.
The expansion leg. All right, we'll see right now. We'll see right now. So IBDA is saying we're low, right? The data range. And what we're doing is we're measuring high and low right now. The dealing range is saying we are low. The low that broke the high, right? This one, we're actually at an OTE, right? Now, so we have 2 checks, which are enough. But the current expansion leg, meaning visually the swing high, right? Any swing high. Are we expanding to the downs? Are we visually down or up? From the most basic retail sense, are we down or up? That's what it means, right? Are we high or low right now? You tell me. From a raw, bare bones perspective, are we high or low?
Low.
Pretty low.
Exactly. Like, we're running downwards below 2 lows, right? Below these 2 lows. So all 3 are measuring and telling us that we are low. And the market structure shift is telling us we're bearish. So which one do we trust? Of course, we trust the truth, which is rule number 1. Right? And your mic, if you don't mind, shut it. Thank you. Now, we combine these factors together with the fact that we have let me remove this. We have a swing low right over here, which was my target. Right over here. And now we've come to the part as to why it was my target. This is the juicy stuff.
Excuse me, it's Mr. Ali. Your mic is on.
See.
It's liquidity below equilibrium of the dealing range.
It is liquidity below. It's basically It's but why not this one? Why did I choose this one and not this one? That's the question.
That one is above equilibrium. They both are inducements, in my opinion.
All right. They both. So could it have reversed from here? Could it have reversed from this one?
Highly unlikely, because
why?
With trading in a range, you could trade up to equilibrium, to the middle of the range.
I mean, right now you have, if you measure, it could have come and hit the 50%, right? It could have hit this rejection block or order block and rallied, right? So a turtle soup in 2 PD array. Why not?
Yeah, but probably rallied just for an OTE entry to go further deeper in the higher time frame.
What's the reason?
Range.
There's one reason, a valid reason, because see, by your logic, discount, right? It's premium. So right now, we have this low over here, and you have this order block and rejection block, right? So why can it not do this? Stops here, 50%, right? Discount, then it rallies. Why? What stops it from doing this? Fuck's sake. Why? Why this low?
As it's the first low in a discount.
No. Because of the weekly FVG. Right? So take a look at this fractal, which you all said is bearish, correct? Except pit smoke. I mean, logically, it's bearish. If you follow ICT like a parrot, right? High, low, higher high, lower low, shift, breaker, sell side, correct? That's the pattern trading, which is incorrect. You can't do that. Let's look at the same exact fractal on the weekly chart. Now what do you see? Are you bullish or bearish? And do you now see why I called 20,400 as opposed to only that? Now, bullish or bearish over here, down here?
Bullish.
No, clearly bullish, but
is there any
bullish?
Is there a chance that you can be convinced bearish? APR.
No, if the bullish PD arrays are being respected, then no, there's no logic to be bearish here.
Liquidity, right? Liquidity purge. Not a stop hunt, a purge, right? So we have this, and we have a market structure shift. You remember what I said about the shift? It doesn't happen the way you want it to. At the beginning of the session, I had a specific drawing with a specific logic, remember? Which is when one of you, I think it was Z1 Trader, he said, show it to us on a chart, right? He didn't like the drawing I was making. So I showed it to you on the chart, right? And here's another example, which is low. Everyone screams, look at the narrative and the logic and the context. Low, below a key level, 16,200. Bottoms in, right? It rallies. Bottoms in for sure, right? It purges them, flips them bearish. All right? And then it breaks the high that caused the purge. The candle, the bullish candle that caused the purge, breaker, right? And it didn't go the way you expect it to, which is simply going like this. This is retail logic. It makes no difference than any other retail trader, right? What happens is a much more psychological process, which is a low, a high, a low, a violent lower low, right? With the purpose, it's not just a pattern, it's the purpose of flipping the bias of the uninformed, right? Now, is this a candle enough to flip the bias of the uninformed? This one over here. You tell me.
Most
is this
definitely.
Candle, is this enough to flip the bias of the uninformed?
Mostly, yes.
It probably flipped off your bias too, right? As smart money, quote unquote, traders, correct? So the purge is not just random. It has a purpose. Every single price movement has a purpose and a logic. Right? Someone's getting fucked over, and someone's fucking them over. Every single one of them, right? So this is a real market structure shift where there's a high, a purge, a shift. And remember, note this down for the turtle supers out there. A real breakout never, or barely, but never allows you to participate, all right? So when I'm looking for an entry, then all I'm looking for is two things. It's either turtle soup down here. If I miss it, which may happen sometimes, once in a while. If you miss turtle soup, right? Then you have an order block over here. If you miss that, then you have the OTE as a second major entry. So you'll be offered two major entry points by the market. At the beginning of any expansion leg, from the up or the down, right? You're offered two opportunities. The turtle soup and a violent retracement with the purpose of scaring everyone away, right? So you see that right here, and you'll see it all the time. It's how price books. It's how turtle soup happens. So entry one, this is another thing which I've not seen anyone talk about, but something I've noticed myself, right? Which is the sequence in which you catch the entries is entry one, turtle soup. If you miss it or you're unsure, entry two, order block FVG, stop loss turtle soup, low. And entry three is a violent retracement, OTE, whatever you want to call it, right? So we got exactly that over here. We got exactly that over here. Now, think about how different that is when you measure high and low, and you look at the higher time frame as opposed to the only looking at one time frame's market structure shift. And again, we apply here the concept. We apply here a concept, the same exact concept of the same exact concept of a lower time frame market structure shift is less relevant than a higher time frame PD array. You'll see that happen a lot, right? And I've spoken about many things right now, and many of them can be a model, but this is one of them, which is a lower time frame, a daily market structure shift is less relevant than a weekly. And now look at the monthly, right? Tell me if you flip your bias or not. Now, a bullish or bearish?
Bullish.
Can anyone convince you to be bearish inside this gap, monthly gap, right? Your mother, your father, your wife, anyone? Nope. Right? So all that happened was a higher time frame PD array, which is the key, a higher time frame PD array, more important than a lower time frame market structure shift with a turtle soup happening inside of the higher time frame PD array, right? That is why I chose this one. It's the weekly FVG, right? And gaps are rebalanced. It could have bounced from here. Keep that in mind. But this is the monthly FVG's beginning as well, right? So, and the monthly FVG was, I expected it to retrade to the monthly FVG. And that is exactly what happened. right?
Romeo. So
What's up?
even if you say don't be a pattern trader, but on the higher time frame, we kind of are looking at patterns in a way.
You're not looking
Correct?
at patterns. You're looking at order flow, right? Difference.
Even though if it's a fair value gap and a breaker on the monthly, we have to trust it.
This is an application, by the way. This is an application of the concept which I said, if a daily key level fails, remember? If a daily key level fails, order block, then we move to the weekly, which is this one. Now look what happened. So this is a visual application of the concept. The daily order block failed. You look at the weekly and the monthly. And you're saying we're trusting a pattern on the weekly. No, we're not. We're trusting a logic and a narrative, right? Which is what happened over here. Smart money pushed this below the low. Everyone was bearish over here, accumulating positions in order to distribute them above this high, and this high, and this high, right? So
Romeo?
they pushed below this low, accumulation, right? Taking the position, accumulation over here, manipulation, gathering more positions, and distribution. AMD, power of three, classic. Nothing new over there either. It's just a matter of training your eyes to look at it. You were saying?
That November low, that the candle which purged, that was the November low, right? That was into the monthly consequent of encroachment of the FPG, the 16,200 level.
Yes, that is one of the reasons. That is correct.
Okay.
Right? But right now we're not focusing on this one. We're focusing on this one right here. We'll be talking about this as well, this whole range, and how it played out. But for now, we're focusing on this concept of two concepts right now, right? A lower time frame market structure shift is, I'll close the mic, is less important than a higher time frame PD array. And buy low, sell high. Don't buy high, don't sell low. You can simply look at the higher time frame, and that's enough. Right? It'll guide you. We turtle souped into the higher time frame PD array, and using that logic, bingo, right? I'm sure some of you caught this as well on Twitter. Turtle soup. All this is turtle soup. Turtle soup all over the place. Turtle soup over here. Turtle soup. Right? Now, I can give you the entry methods right now, or I can wait, be an asshole, and give them to you later, the next session. Which ones do you want?
Now.
Were you supposed to do number 3 first?
Exactly. That was the plan, which is to go through market profiles. This is, of course, this whole thing was showing the importance of a higher time frame PD array in case someone got lost, right? And all the noise. All this is buying low, selling high. Rule number 1, keep it in mind. If it doesn't make you money, it saves you money. And blending the higher time frame into the analysis always, right? A lower time frame market structure shift is less relevant, is irrelevant in front of a higher time frame PD array, right? A side note for those recording, I hope you caught these. You caught this. You caught all of this. Did you? Did you not caught?
I have a doubt.
Romeo, Z1 Trader is asking you to unmute him.
What are you saying?
Is the Z1 Trader who's recording, he wants to speak.
There is. I had to mute him because of the noise.
Yeah.
My bad, my friend. So,
can I ask a question?